Welcome to the Ask Anthem podcast, where we simplify tax and business strategies. In this episode, our host Sarah, along with Amy, a tax manager Anthem strategist, discusses a smart tax strategy for business-owning parents, paying your children through your business. This approach is legal, tax efficient, and a great way to teach financial responsibility, provided you follow all applicable local, state, and federal laws regarding minors in the workplace. Tune in to learn how to implement this strategy effectively while avoiding common pitfalls. As always, consult your CPA for further guidance. Thank you.
Hello and welcome back to another episode of Ask Anthem, the podcast where we break down tax, strategy, and what's affecting businesses today. I'm your host, Sarah, and today we're diving into a hot topic that a lot of businesses and parents ask us about, which is paying your kids through your business. So it sounds like a win-win at first, right? You reduce your tax liability while teaching your kids about money and responsibility. But like most tax strategies, there is a right way and a wrong way to do it. So, joining me today to break it all down is Amy Jordan, one of our CPAs here at Anthem, who works closely with these families and business owners on strategies just like this. Welcome, Amy.
Thank you for having me.
Of course. And so I just want to start with the basics. First of all, can you legally pay your kids through your business?
Yes, you can. You have to do it, of course, like you said, legally. So you need to make sure that it's a reasonable amount of work, that you're giving them reasonable pay, and that you're documenting everything correctly.
And what kind of jobs do you typically see kids doing in these family businesses?
It depends on their age. So if it's small children, it might be stuffing envelopes, or it might be doing the shredding or doing some light work around the office. Teenagers, it could look like social media help or going to events for advertising or marketing, stuff like that. If you're paying a young child, like a 3-year-old, a salary for someone who's tenured in their industry, probably not going to be legal.
Yeah, that makes sense. And more on the numbers side, how much can you actually pay them? And what's the tax benefit from that?
Well, you can pay them anything, but really what we're looking at is to pay them around the standard deduction for federal. So for 2025, that would look about $15,000. And on the state, it's going to look a little bit different. So you're going to want to get together with your accountant to make sure that all tax liability is taken into account to see what you're going to be end of year. But we're looking about in the $15,000 range, and that way you get a benefit for your business. And then you're also getting money out to your child for their legitimate work.
Okay, gotcha. And then are there certain types of businesses that this strategy might work best for?
It can work with any business. Kind of a pro of having an LLC or a single member LLC or a sole proprietorship is you don't have to pay Social Security or Medicare tax on the wages that you're paying your child. If it's an S corporation, you would still have to pay Social Security and Medicare to them. But again, you are able to get them income out of the business.
Okay, so if a business owner is ready to do this, then what do they need to document?
They need to document the job description that includes what this employee and child is actually liable for. You're going to need to get a W-4 form. You're going to need to do taxes at the end of the year. So they're still going to need to have a W-2 reported to them. This would be for either the sole proprietorship or the partnership or S corporation, and then they're going to need to file a tax return at the end of the year, even if they're under that standard deduction limit.
Okay, gotcha. And then what are the most common mistakes that you might see when trying this strategy?
Not documenting, and then not having pay that matches the child's ability. So clearly, I have a daughter. If I bring her in and Anthem pays her for working a tax return, my income, clearly she doesn't have the competence to do that, right? She doesn't have the skill set to do that. So the IRS is going to look at that and go, nice try,
right?
Throw it out. And then you'd have penalties. But if you have work that matches their competency and skill level as a child, then that's what that will be okay.
Okay, that does make sense. And then kind of from a more zoomed out perspective, how does this strategy fit into long-term financial planning for a family?
Yeah. So it lowers the net income in the business, which is a benefit. The tax isn't going to be a high on the child's return just because if it's their sole source of income and you're paying under the standard deduction or just at, they're not going to have a high tax rate on that. So that's going to be saving. You get the savings in the business, but then you're not offsetting it with high tax rates for the child. Additionally, if a child has earned income, they can have a Roth IRA and start contributing to it. So that's going to help get them set up on the retirement path and tuck money away for long-term investment and long-term retirement solutions.
Okay, so besides just like your own children, can this also apply to like nieces, nephews, grandkids?
You can still pay them, but you don't get the benefit of paying your own child, like withholding the Social Security and Medicare. That is not available. If you hire other people within your family outside of your immediate unit, you're still going to have to follow regular rules as if they were an employee that you hired and you didn't know them. But you can still employ them. That's okay.
Okay, just not the same benefits.
Not
as
the
if
same
it's
benefits.
like your own kid.
Correct.
That's good to know. That's good to know. And then, so if I wanted to take this first step and I'm someone who wants to hire a family member or a kid, what are some of the first steps or the first step that I should take if I want to explore this?
Please see your CPA first. We want to make sure that we start doing it clean from the beginning. Some people will pay in cash and we hear about it afterward and after reporting periods. So definitely see your CPA first. They'll set you up on the right path to get this done correctly and be in compliance with all local and federal, state rules. And then once that happens, you're set to go.
Sweet. Well, that's great advice and also a great note to end on as we wrap up this episode. Amy, thank you so much for being here today. This was incredibly helpful. And if you're a business owner or a parent, this strategy might be one of the most smart moves that you can possibly make this year. If you want help setting it up or want to know if it's the right fit for your family or business, feel free to visit us at anthemstrategist.com or send us a message. We are more than happy to walk you through it. Thanks again for listening to Ask Anthem. We'll catch you next time.